Bladek, and I'm here with Sam Thompson today for episode 71 of Canadian Mortgage Weekly, Canada's video mortgage news podcast here. And we're really excited today because we have a really good episode. Sam and I have a special guest here today. And Sam, I don't know about you, but I'm really pumped also about just this review that we're going to be going over today. What about you?
Yeah, it's going to be an awesome video, a big one for you for episode 71. We're going to look back at some notable news. And yeah, our guest speaker is going to be awesome to shed some insight into the real estate side.
Yeah, so as we get right into it here, let me introduce today's guest speaker. His name is Andrew. He's been in the GTA real estate market now for over 10 years, a seasoned veteran with real estate. Andrew will be giving us some commentary today. He lives in Toronto with his wife, Laura, and his son. Andrew, welcome to the show today. It's great having you on.
Hey, guys. Hey, Joe. Hi, Sam. Thanks for having me on. I appreciate it.
Yeah, it's great. How are you today?
I'm fantastic. Actually, it's a nice day. Had a chance to look at some of the market stats today to get prepared. And yeah, I've got some great stuff for you today.
That's excellent. Yeah, we're really excited to have you on today because, the first little bit of 2022, it's been such a roller coaster so far.
Absolutely. In fact, yeah, the stuff, I'm going to give some context, if it's okay with you guys, into what the numbers are. And then I'm going to take you into what's actually happening right now and what happened last month. So if it's okay, can I share my little screen here?
Oh, yeah, sure. Go right ahead.
Okay. Let's see. Let's go to this one.
Yeah, this is great because with the first quarter of 2022, there's been a lot of questions that we've been getting on the mortgage side. So it's going to be really good to hear about what has been happening on the real estate side, especially from the GTA perspective.
Absolutely. And the GTA has been quite nuts. Can you guys see the screen okay? I got two screens going, so I'm doing two at once. Is that okay with you guys?
Yeah, it looks absolutely great. Yeah.
And I know you guys are having a first-time homebuyer thing coming up a little bit. Hopefully, this will be some good news for folks that'll be watching that at that later time. So, as Joe knows, I like to give context for anything that I'm saying. So, I only got 4 slides, I think, and you guys are going to see, your viewers are going to see a lot of numbers. And to be quite honest, the numbers are not the thing. I only put them here so you know that I'm not just blowing smoke or just exaggerating things. But instead of actually memorizing all the numbers, which obviously your viewers aren't going to be doing, what I want to do is convey more of a general theme, and the truth behind the numbers will really come through. So what I really wanted to say initially is, in context of what happened in the first quarter, just in the past 3 months, is it's important to see what happened at the end of last year.
Yes.
And 2021, as I'm sure you guys know, and probably some of your viewers have as well, have seen as well, is that it was a record year across the board in terms of sales. We had over 120,000 sales in the GTA by the Toronto Real Estate Board. It is by far a record, something like 5,000, 6,000, 7,000 at least, possibly even more. And so when you look at what happened this quarter, let's look at, let's see. Make sure I'm not in the right place here. That's what I wanted. Forgive me, I clicked too early. So context. The reason for what's happening now can be found at the end of 2021, which is very typical of the real estate market. As you guys know, things don't necessarily happen immediately because transactions and such take a long time. So I'll get into this stuff and I'll get into the more impertinent stuff in just a couple of minutes. Note to keep in mind here is a balanced market in the GTA. In terms of balanced market, is 20,000 active listings. What that means is there are 20,000 properties available, give or take, at the market at that time, and that constitutes a balanced market. We have not had a balanced market in a very long time. So that's something to keep in mind. And all the numbers that I mentioned, again, I don't expect people to remember these numbers, but everything in light of 20,000. So when I mentioned thousands, in light of 20,000. So November was a very, very busy month, incredibly busy month. It was a record November. Last November of 2020 was the record. November 2021 was as busy, which is interesting. Average price was 1.163 in terms of overall. I know you guys know to take the average price with a bit of a grain of salt. The point is, the market was absolutely rocking in November of last year, and the active listings, the actual inventory, this is where it gets kind of important, especially considering April right now, was just over 6,000. This is 55.9, almost 56% lower inventory than November of 2020. That lower inventory is a theme that went all the way through until just last month. So December of 2021, you'll notice lower sales volume. So the overall number of sales dropped. Very normal for December, because December of 2021 was very crazy. But average price was about the same as the month before. Active listings again, and here's the thing, 59% lower than December of 2020. So what you notice the pattern is, in such a busy year, all of the inventory got kind of eaten up by the huge buyer demand due to several of the reasons that I'll be mentioning in just a bit. Ending December and going into my next slide here, January of this year. So what specifically happened in the market in the first quarter? So January, you see these the same kind of stats one after the other, not to kind of make it too mundane, but there's a pattern that's going to develop initially. You have 18.2% less volume. You notice the first few months, it was consistently about 17 to 18% less volume in terms of sales than that of 2021, which of course was a record year, therefore a record first quarter. Average price up 28.6%. So those are the two strange things. Less sales, the average price up tremendously. We started with the record low inventory, about 3,300 active listings. You'll remember 20,000 is the balanced market, 3,300 is incredibly low. And if you guys know anything or saw some of your clients trying to get anything done in the GTA market, especially on the buy side in the beginning of the year, it was insanely difficult. That month, January, ended with 4,140. Days on market was cut in half. So incredibly low inventory, incredibly strong demand. Homes were literally flying off the market. Average days in the single digits, sometimes less than a week. February, much of the same thing. Lower sales volume than February of 2020. And so perhaps, February 2021. So you'll notice sometimes in the articles and such, they'll be saying, a slump in sales. Well, this is a heck of a slump if that's what it is. So less volume, average price still up almost 28%, which is insane if you think about investments of any kind. Year over year, of course, we're talking about. Inventory more than doubled from that of the beginning of the year. Now, you'll remember in November and December last year, inventory was half of what it should have been around that time, and certainly was in 2020. You'll notice this active inventory is starting to come up now. The lower than number is becoming smaller and smaller. So inventory is doubling. It's still very low, about 7,000, should be much higher than that. Again, 20,000 being this balanced market. And average days on market is still 42% lower than February. So low inventory still, homes selling very quickly, and overall prices up almost 28%. This is February, 2 months ago. Now March, this is where it gets a little bit interesting. March gets its own slide eventually. Less volume still, but notice a break in the pattern. 18%, 16%, okay, pretty steady considering we're comparing it to a record year. March, 30% less volume. And this is the stuff you probably see in articles and online and in newspapers and such. Big break in volume. And there are reasons for that. I'm going to discuss that in a second. This is what's going to be important for you guys watching. Average price is only up 18.5% in March versus March of 2021. I say only very sarcastically. In the GTA, people are rolling their eyes because that's an incredible amount of money. Inventory year over year, 22 compared to 2021, interestingly, suddenly starts to catch up. In January, we were down 44%, February down 20%. In March, we were only down 4%. So basically, we had the same inventory this March as we did March of 2021, even though the previous 2 months, the inventory is much, much lower. So to put that together, I don't want to overwhelm with too much information. Very, very low inventory, consistently rising higher. What happens when you have supply and demand and supply increases, regardless of the demand, naturally prices are going to start leveling off a little bit. And that's just what happened in March. Very interesting. This is the only graph I wanted to use because I don't want to get overwhelmed with graphs and such. And, for your viewers watching later, obviously you can pause and take a look at these stats. Sold, here's a 30% less, insane. And again, average, but nonetheless. And average days on market is still 11 versus 13 in March of 2021. So this is where sellers, 2 weeks on the market and they're wondering what's going on. That's only because you're comparing it to a very crazy market. This is really important. This is some of the stuff that Joe knows. I'm adamant about these things. This is some of the stuff you'll see mentioned. So here's a focus on March last month, which will tell us what's going on now. March home sales, direct quote from Treb, declined 30% over last year. Now, Stop that. And that's what you were seeing in the newspaper, with maybe an asterisk to continue at the bottom where it says, but it marked the third best March and the second best first quarter on record. Therefore, it's less than crazy, but second best, which is pretty astounding. So anyone saying the market is cooling off or is in a slump, well, it depends what they're comparing it to. And myself, I try to show you what it is that I'm comparing it to. Right. So around the time of March break, which is roughly in the middle of March, a shift became visible. It was a little bit before and after, depending on what area of the GTA you're in. And this is actually a big deal. You know, the previous information kind of to get you to this point, this is what I would really have your folks know that are watching your show, especially anyone who's thinking of selling, but buyers as well. And I'll tell you why that is. So why did the shift happen? There's a few different reasons that I'll show here. And you guys obviously know about most of these, if not all of these. So first of all, and I'm not being sarcastic, I really mean this. It is an election year. So in an election year, politicians will naturally start doing things visibly. And if you don't believe me, if you think I'm being sarcastic, just look at CP24, look at any of the news channels. You'll see things they like free this, free that, rebate on this, some sort of a tax drop on something. That's because people are trying to buy your votes. They're trying to get your attention, if nothing else. And again, at the risk of sounding sarcastic, politicians want you to think that they're actually doing something about the housing market. Why? Because the housing market seems to be kind of out of control. Most people. That's one thing. Interest rates are increasing with rumors of them going up several times. Joe and Sam, nothing new to you guys, but you guys know the actual truth. A buyer or seller looking at this, not knowing the market, not knowing the mortgage information that you guys do, they'll look at something like that and go, oh no, they start to panic. So that begins to get people a little wobbly. The foreign buyer tax, which in personal opinion doesn't do a whole lot. It has some effect more psychologically than the actual effect of the tax, just went up to 20% and it was 15% before that. So that just went up. Again, foreigners often being the scapegoat for much of this issue that happens with normal market anyway. So, and this is actually important. You might not sound very fancy. Bad weather in March. The up and down weather, you guys saw. I mean, I had headaches every other week because 14 degrees one day, -7 the next day. Snow and those kinds of things. That actually plays a role. People not always want to go see a house in a snowstorm.
Yeah.
And of course, the sellers have no control over that. So there are all these things that I just mentioned, and the actual psychological reality is some buyers just got a little tired. 5, 6, 7 offers in. They're kind of, I'm not as excited about this house buying process as I used to be. And the biggest difference by far, and I've seen this time and time again, is inventory. The biggest issue is inventory. It cannot keep up with the demand, and it's still lower than it should be. However, as you guys saw in my previous information, March, it almost caught up to where it was year before. It's way different. It is as of this morning, in fact, let's shift to the next one. There are about 11,200 listings as of literally this morning on the Toronto Real Estate Board. Wow. That's more than last month, considering 3,500 that we started the year with. So if I'm giving you too many numbers, I apologize. The point being, inventory has increased tremendously. And this is why, in about the middle of March and such, with the weather, with the conversations, with the political stuff on the news, things started to slow off a little bit. So I think this part might probably be the most important one for your clients, guys, in terms of what should I do in terms of this? Like, what does this all mean? So what? And this is where I highly emphasize this. And I think Joe and Sam, you guys will play a role in this as well. You'll see why. In light of this, what should you do? So homeowners in general, as you guys know, relax, sit tight. You're doing great. There are no issues. I have so many different things I won't mention here about the market and what's going to be happening with immigration and such that tell you that the market is going to continue fairly well for quite a while with little, ups and downs, minor ups and downs, shall we say. Yeah. If you're a buyer, I know you guys deal with a lot of these. You'll be talking to first-time home buyers sometime soon. It is getting easier out there, but by no means, if you're a buyer and you're watching this, please listen. You can't slack off. Even though it's slowed down, this isn't the time for you to go, okay, I'm only going to see homes on the weekends. Or no. You definitely want to be in the same mode as you were the first 2 or 3 months, but understand and be encouraged that you will probably do much, much better and have success much, much sooner. You have to be prepared with your financing. And that's not, you can't, obviously I have 2 mortgage guys on the thing here. Getting prepared with your financing is incredibly important. By prepared, I don't mean a vague estimate online. I mean, you have a conversation with Joe or Sam about your specific situation. They have your T4s. They know whether you are or not on mat leave. They know all your situations, and they actually have your pre-approval or the actual firm numbers in front of you. It's incredibly important to be ready. I can't begin to tell you the stories, even this year, that some of them, not my clients, but folks on the other side of the transaction have had. If possible, look for areas of properties with competition. What I mean is areas with first-time home buyers, areas that are townhomes or condos. If there are a lot of properties in that area, there's natural competition, which means it's much less likely that one particular unit, one particular house is going to get a very high price, way above asking. Why? Well, because there's competition. If I can get this one, there's that one I can look at, and there's that one. Competition naturally makes things a little more affordable because that's where inventory comes in. Resist the urge to time it perfectly. When you see what I'm just saying, when you see that there's competition, when you see that homes aren't selling exactly as fast as they did in January and February, you may get the urge to say, okay, I'm just going to sit on it and wait until the market really goes down. Nobody knows when that'll happen, nor do we actually even know if the interest rates are going to continue going up or if they might come down at the end of the year. I don't know. Joe and Sam certainly know more about that than I do. Over year after year, we've seen this idea of timing it perfectly, and believe me, it does not work. When you're ready financially, get out there, start looking for properties, especially ones with competition. Sellers, this is important. Timing is very important right now. If you've got competition and you don't have to sell, you may want to wait a week or two before you hit the market. That's basically the idea. Know how prepared you are to sell. If you're a seller, you have to know how long it's going to take for you to actually be able to hit the market. Do you still need to do some painting? Do you still need to fix something or renovate something or upgrade something? Maybe you need to put a new appliance in. Whatever it is, you have to know a rough timeline what it is. It'll take you a few minutes of your time to sit down and think about it. Just a few minutes, and it'll save you so much headache and heartache further down the line. How close are you to hitting the market? You need to know that. Know what's happening in your area and adjust expectations accordingly. I just mentioned the stuff that's happening with the prices. If something was selling for X in January, your house, similar to that one, might not sell for X. It might be slightly lower. Not because the market's dropping and the bottom's out. No, not at all. It's just that you've got competition, and buyers are starting to get a little tired and inventory is increasing. So be realistic. Good to have an agent that knows the market as well, I might add. If possible, hit the market when there's minimal competition. I mentioned that already. But ASAP. And what I mean by ASAP is this inventory is going to keep increasing. So if you're thinking of selling, I would say the sooner the better, even regardless of competition. Why? Because things are going to continue this way. Spring market always increases in inventory up until June. And in the summer is when we have probably some of the highest inventory of the year, most years, actually every year so far. So the last thing I'll mention is that the hard one, the buying and selling. I've dealt with a lot of these people. All of the above apply. Please note all of the above being prepared, knowing what your market is like. And here I threw in this particular one, know the market where you're buying and where you're selling. And of course, that is when where a good realtor comes in handy, that knows the days on market, where you're buying and where you are right now. That way you know which one you should do first and how comfortable you're doing one or the other first. And of course, after you have this information, I always say act accordingly. Take the action, do what you need to do. Don't hesitate and resist the urge to time everything perfectly. So that's the market right now. I don't know if you guys have any questions, or hopefully that was somewhat thorough.
That was very thorough, actually. I always really enjoy the stats that you put into your presentations, Andrew. So thank you very much for doing all that. I'm sure I'm sure it took a little bit of time there. I guess you know, the house prices have definitely gone up. That's definitely something that is evident. But you make some good points about how buyers should act and how it's really important to get your numbers looked at by a professional. That's never been more important than in this market, wouldn't you say, Andrew, with the amount of competition and with the amount that people are extending themselves to actually get into the market, some of these folks, right? You really need to know your max budget so you can get in and you know exactly how high you can go and exactly how you can work with your real estate agent to get that property.
Absolutely.
Yeah.
I might add, Joe, one thing I really enjoy that you've done for me just recently, and you've done for my clients before, is not only do you give the maximum mortgage, you also kind of give them a rundown of what it looks like per month. And that's a big deal for a lot of folks because they have normal expenses and life expenses and things like that. And if they know what the monthly is, they're much more comfortable knowing, okay, this price range, we're very comfortable. This is a bit of a stretch. This, well, we don't even need to bother with. And that bit of information is amazing how helpful it is when someone actually has the exact numbers that you've given many times.
Exactly. Yeah. Have you noticed any, like, have your clients been talking about, just a couple of questions for you. Have your clients been talking about interest rates and how that's going to affect them and in their home search right now? Or is that not really a concern with your clients?
To be quite candid, they do mention it. It's a topic, but it really is not the main topic.
Yeah.
I found certainly it affects, as you know, it affects the pre-approval, it affects the max price and those kinds of things.
Yeah.
But I find people that are looking, that are seriously looking, if it was double or something of that nature, clearly that'd be a big conversation to have. But what's been happening recently, for the most part, is not really assuading people from getting into the market. They know what's happening regardless, and they know, listen, I need to get in on this.
Yeah, people seem to generally know what is happening. And, you know, Sam, you probably see that as well with folks coming in and asking us, you know, we want to go fixed. They know that the rates have been going up. So they are locking in and preparing, but still wanting to go ahead and purchase real estate because, you know, they also see the other items that we've talked about today. There's the immigration that's coming in, and that's going to keep funding more homes being purchased. All these immigrants are coming into Canada. They have savings, they're ready to go, and they get jobs. And there's a really good New to Canada program available for these folks to actually buy their first home. That's going to continue fueling the housing market going forward. And I'm sure you're seeing a lot of those people on your side too, Andrew, that you work with.
Absolutely. I've had several conversations just in the past few weeks with people getting their permanent residency, people who have not yet gotten it but are going to. And one of my recent market updates, I was doing just looking at numbers of students that are here, foreign students that are here, the percentage of whom are going to want to become permanent residents in Canada and therefore possibly be a potential buyer. And we're talking in the hundreds of thousands. You add immigration to that and those kinds of things. And I mean, there's going to be a strong demand ongoing. So it's a big deal. But yeah, I'm getting a lot of folks that are new to the country asking questions, about PR, about these programs that you just mentioned. A lot of interest. So the market is continuing pretty strongly.
Yeah, it's going to be interesting to see what happens going into quarter two. You know, good tips today from Andrew for anyone going into quarter two, looking at getting into the market, or even if you are in the market looking to sell and buy. Those are really good tips. Sam, did you have any questions for Andrew? I feel like I'm hogging the floor here.
No. I mean, again, it was super thorough information and a lot of good tips. I mean, talking about trying to time it perfectly is something we've seen a lot of people, you know, over the last 2 years missing out on great rates, low prices before they've been jumping. But I'm assuming there's probably going to be people watching that are thinking, okay, if Andrew's saying that inventory is increasing, you know, we're starting to see it become almost more of a balanced market. Where do you see house prices in the foreseeable future? Will it come to a soft landing? Because I know, you know, capping off January, February at like 20%, it's normalizing a bit for March, as your statistics said. But where do you think it's headed, you know, as they're heading into quarter two?
Good question. Certainly can't give a firm answer per se, but it does. Oh yeah, if I could, goodness, it makes so much.
Of course, yeah.
No, in reality, all the things that I mentioned and Joe has mentioned as well. The demand, there's just no way to dissuade the demand. It's going to be there regardless of what and how you do, no matter what programs you might put in. In fact, the only thing you can really focus on is inventory for the most part. Because everything on the buyer side has pretty much been tried in terms of taxes and stress tests and all these kinds of things. And some have done their job at different times, but lo and behold, we're still at this kind of price range. As inventory increases, I do foresee a not so much a soft landing, but a lowering of the appreciation. We certainly can't keep going at 25-30% annually. That's insane. That's not good for anyone. Personally, I prefer a balanced market. It's easier for both folks and you know, buy and sell and that kind of thing. My anticipation is, I don't know if it'll be single digit appreciation by the end of the year, but I do think it's going to be lower doubles, maybe than teens or something like that, because again, the sustainability just isn't there and inventory needs to increase. In terms of some folks, I'm sure you guys have talked to probably think crash or something like that. very rare. You'll have to double or triple the interest rates, and you have to at least double or triple the inventory at the same time. I heard something very interesting just this morning before I got in with you guys. I think Benjamin Tal mentioned it, and I think you guys know who that is. It was when house market crashes only really happen if interest rates raise quickly upwards, not raising upwards. Interest rates do that, and I've done that back in the 80s and 90s. We got double digits, almost in the 20s. But you don't always have a market crash if the interest rates rise. You have a market crash if they rise too quickly. And you guys have seen even this year, it's been significant, 0.25, 0.5, whatever. Nonetheless, not a market crash because it doesn't go up too quickly. And I think Bank of Canada will be stupid to go up too quickly, frankly, considering the economy. So long story, to answer your question, Sam, forgive me. I do think they're going to keep going up. I think we're down a little bit from January, and I think we're not going to go back to that necessarily. But now that we've leveled off a little bit, it's going to start going up again, as per normal.
Sounds great. That's a great answer. And the great also news for any homeowners trying to get in the market right now. So thanks, Andrew. I guess with all those rate increase talks that we've been chatting about this morning, we have that announcement coming up next week. I mean, we're going to be finishing off our episode here in a few minutes, and it's been great having you on. But one thing I wanted to just remind our viewers is that next week we have our Bank of Canada interest rate announcement. And Sam, as we were chatting about this morning, they're also releasing the monetary report. There has been talk about an interest rate increase next week, a talk about a double interest rate increase next week. So it's 2 quarter points. Do you think that's going to create some opportunity out there in the market as buyers that are ready to go, have pre-approvals in the wind? Do you think there's going to be any change in the market if rates do go up and present any opportunity?
Oh, absolutely. I think
it
would be ingenious. Well, maybe not the right word, for folks to get the pre-approval now as soon as possible and be prepared before the interest rates start going up. Absolutely, there are pockets of opportunity even now. There are pockets now, again, in areas of where there's competition and things like that. Interestingly, first-time homebuyers especially, they're often buying the kind of properties in which there are more than one. So there's some competition. I would be very optimistic if I were a home buyer, and I would look for opportunity. I would not necessarily look for prices to drop more. I know some people are looking for that. They may happen slightly in certain areas, not everywhere, and but they may not. In fact, they may start going up again or maintain. But locking down prior to the increase in rates, smart move. I've been pushing the services of guys like you for the past month tremendously because I think it's a very valuable thing.
Okay, sounds great. Well, thanks very much, Andrew. It's been great having you on. Sam and I will be back next week with our rate announcement episode on Wednesday at 10 in the morning, Eastern Standard Time. We're going to be doing the Bank of Canada pre-rate show as well as the the rate announcement episode. So Sam, looking forward to that. Just a little bit about Sam. Sam is a mortgage agent based out of Barrie, Ontario. He originally was from Ottawa and has been with the Mega Mortgage team for just over 2 years. So Sam, great having you on the episode today as well.
Yeah, of course. Thanks for having me. And again, as Joe said, you don't want to miss next Wednesday's rate announcement. Anybody in a variable rate, curious about a variable rate, it's going to be really good to see also what Bank of Canada's monetary policy is, because I know that does give us a bit of insight and some feelers for what's up next. And of course, our host for today, Joe Bladek, has been in the industry for over 11 years. So, he's super knowledgeable about mortgages, housing industry, knows a lot of creative solutions, living up in Aurelia with his wife, Mel, and 2 kids. So thanks for having me on the show today, Joe.
Thanks very much, Sam. And thanks very much for our viewers. Thanks, Andrew, for joining us today one more time. Andrew, if anyone's looking at getting in touch with a real estate agent in the GTA and surrounding area, Andrew's been in the industry for over 10 years. He's a veteran and has been dealing with first-time buyers, second-time buyers, luxury home buyers, all alike. So he's ready to get started. Andrew, can you just give our viewers a little bit about how they can get in touch with you?
Oh, thanks, Joe. And it's a pleasure working with you guys all the time. I love this. You guys are amazing, honestly. No, they can reach me at 416-873-2275. My website, askandrew.realtor. That's probably the easiest way. All my information is right there. And even if you just Google Ask Andrew the Realtor, you'll find a whole bunch of my little sites there. Please feel free to reach out, email, text, whatever. All my info is online, and I'm happy to just answer questions if nothing else.
All right. Thanks very much, Andrew. Thanks, Sam. And I thank you all our viewers. We hope you have